Hi everyone, my name is Risha. Today is the 30th of December 2023 and I'm going to be making my weekly prediction for SPY as well as reviewing last week's prediction. As usual, we'll go over the monthly, weekly, and finally the daily charts and then switch over to the Excel sheet where we'll go over the final prediction in more detail, review the option chain, and also the last week's prediction. But before getting into the video, it's important to make the disclaimer that all information is completely educational and therefore it's important to conduct your own technical analysis or any analysis that you like before entering a position in the market in order to ensure that that is something that you can stand by, and do not just base your entry solely off of this video. With that out of the way, let's get into the video. So monthly charts, we can see as December is coming to a close that the month of November had an extremely strong bullish rally on pretty average volume. But this month, although it hasn't closed yet, already has more volume than the previous month. And considering the trajectory that it is going at, it is very, very likely that the market continues to go upwards, since we can see these two candles are very, very strong. And the second month is actually higher in volume, which is an even more bullish indicator. And we can see RSI is steadily going. It has now reversed back upwards, and the average is also starting to tilt. So from the monthly charts, we just get bullish signals from the RSI and from the price action along with the volume as well. So let's switch over to the weekly charts. Now we can see that this 9-week bullish run seems to be weakening, because we can see the previous two candles were very, very weak. And I even mentioned this in my previous video, there is no clear direction in the market right now, since we can see that this candle brought quite a bit of momentum and these were pretty still candles, but then this candle here on the 30th of October brought a lot of momentum into the market, and it's been going pretty steadily. But these two candles progressively, by the way, their real bodies have declined in size as well, showing less and less conviction to either direction, and we are going to keep that in mind. So immediately, this week's resistance will not be the high of the candle, since it is just likely that the market springs up because of the new year. Instead, we will be taking this as the resistance at 480.06. Since if the market is to rise as it normally rises in New Year's, or even if it doesn't, this is a very high long-time resistance at 480.06. And if the market is to go upwards, we do need confirmation that the market is strong enough to break this resistance, since if the price action does go close enough to the resistance, it might just rebound downwards. So instead of just taking a bullish position off of the break of this candle's high, the weekly candle's high, we will be taking this as the resistance. Now, for the support, since this is pretty much 5 points away from the current spot price, we want the support to be around that distance as well. So we will be taking the close of this candle, which also is a minor support, since we can see that this candle dipped below and then went back up this point as well. So we can take it as a minor support. That is being a little bit more aggressive than just taking the low, because if the market is to go down, we do want to capitalize a little bit of the profit, and if it does go this far down, it's pretty likely that the market continues to go downwards even more. So that is the support and resistance we will be taking, because we can see that the volume has steadily been declining the last three candles, and that is actually not confirming the bullish movement. So we want to keep our chances pretty equal of it going either side. RSI, however, is soaring, and so is the average now. So we have a bullish signal there, a confirmation of the current price direction. But again, we don't have any signals from the weekly charts, and the volume is declining, showing that there is less and less conviction in the market. And we do have to keep that in our focus as well. Daily charts make this even more erratic, since we can see the first 2 days were bullish on low volume, although the second day did go higher. Third day had higher volume, but it was a doji candle. And the last day on the highest volume was a spinning top type of candle. Not really though, because we can see that although they had a measurable real body, it did end up closing below. So we had a pretty erratic week. This is why the weekly candle looked how it did. The RSI has dipped below the overbought zone, and it's now in the safe area at 68.40, with the average actually still above the overbought zone at 72.39. So again, we don't get any candlestick signals from the daily chart as well, which is further confirming why the support and resistance needs to be pretty much equally placed, since if the market is to go in either direction, we don't have really any idea as to where it's going. So Microsoft Excel. Now, immediately last week's prediction was actually wrong. We can see that we had a buy signal on the 28th with an entry price of 476.88, quantity 236. So our exposure was 112,543.68. Now we can see that we exited on at 475.31, which gave us a loss of 370.52. And our current weekly closing balance is 112,578. So actually, we haven't entered a trade this week yet, so we cannot put these values. But for this week, we can see again no trade yet. We wait for the candles breakout from the support and resistance that we mentioned, which is the resistance at 480.06. Sell when it falls below the support at 469.33. Target of a 1% trailing stop loss. If the target or stop loss isn't hit and we're in our position, we take a closing price on Friday. Max WAF for the weekly expiry this week is 480 CE at 87,209, 434 PE at 46,823, and the PCR is 1.03, which again, PCR being this close to 1 shows how even the market is, although very slightly more bullish. But again, you can see that it went straight from 1.97 in the previous prediction to 1.03, which showing the market's pretty neutral right now. So the max Y for the monthly expiry is 460 for CE at 74,953, 430 for PE at 177,754, and the PCR is 1.89. So it's actually gone up from last week, and we can see that that means that people are more bullish this month as of now. 1.89, however, is really overbought. And when these positions do end up expiring, they will actually end up causing a very large downturn in the market. So actually this high of a PCR isn't a good signal at all. But as for now, the weekly and monthly trend is up. So that wraps up our video my video for SPY's prediction this week. As usual, I'll catch you in the next video where we'll go over this week's prediction and make a new one. But that's for now. Thank you for watching. Enjoy and have a wonderful New Year's Eve and New Year's.